Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
All right, so welcome to Mortgage Mom Radio. I am Debbie Marcoux. I am the Mortgage Mom, and today we're going to be talking about homeowners insurance in California. So if you are listening to this show and you are not in California, you can go ahead and stop listening now. Or if you're just interested and you want to know more, then stay tuned and don't go anywhere. But there have been issues going on now, and it's been for months and months that we've started to see these insurance policies go up. Being on the lending side, we're starting to have a difficult time getting insurance policies for some of our properties that are in escrow that are trying to close. The premiums are significantly higher than they used to be. Some of the condominium complexes in California have lost their insurance, which means that we can't do lending in that complex. So if you're a seller and you've got a condo and your insurance has been lost by the association, well, you're going to have a really hard time selling that property. So I want to talk today about California homeowners insurance. What can you do to find a policy? Have you lost your policy? Did you get that letter in the mail? Why are people losing their policies? Did your premium go up? Is there anything you can do to try to get that premium down? So we are going to talk today about California homeowners insurance. And this does affect everybody. This is for current homeowners as well as future buyers. So if you have a home, you need to have homeowners insurance. If you don't have homeowners insurance, then you can't get a loan. So this is very, very important. So some of the recent articles that I pulled, and I'm not going to read these articles for you, but there's one in Money Magazine on November the 1st of 2023. And it says premiums to double for some California homeowners amid insurance crisis. Then there's another article that comes out and it says, this is from, let's see which one, ABC 7 News. So if you guys believe all that one. This was from January the 3rd, 2024. State Farm home insurance to increase in California by an average of 20%, report says. So I did pull a really good article from Policy Genius, and they actually explain the crisis, what happened, why is this going on, what in particular can you do, where can you go, what are resources for you, and you want to get ahead of this if you are a current insurance holder. So if you own a home and you have insurance and you are insured by State Farm or Allstate for starters, those would be two of the the insurance companies that have chose to stop writing policies in the state of California. A couple of them have said, we're going to honor the policies that have already been written. Others have said, we're just canceling policies. We're not going to hold them any longer. So I think this is a great article. We're going to talk about this today to get you guys up to date with information. What is happening? Why are you seeing these policies increase? But we are going to take a super quick break. And when we get back from the break, again, remember that this is an interactive show. You guys are more than welcome to put your questions into the feed. I will read them out loud. I will answer them for you. I want to bring you the information that you need and what you are looking for. And if you are one of the brave ones to step up and ask the question, I guarantee you that you are not the only person with that question. So please do that. Get interactive with me. If you are listening by radio on Saturday and you want to do this with me live, you can see me film it in the studio. All you need to do is text the word mom to 844-935-36 34, and you will get one text message a week to let you know that I've gone live. And I usually give you a little brief summary of what we're talking about that day. But it is the only text message that you get from me. No junk, no spam. I promise. I'm not trying to sell you anything. I'm not selling your information to other companies. It is just a notification that we are live with a link to join me in the studio while I film. So if you'd like to do that, once again, you're going to text the word MOM to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. And remember, that is the same phone number to call my office. So if you have any questions about anything, please feel free to call. If you want to get a loan started, we're happy to help you. You want to get pre-approved. Things are starting to rock and roll. We've taken in more phone calls and more loan applications over the last couple of weeks than we probably did in all of 2023. So things are starting to rock and roll. They are shaking, which is great. And you want to be able to get out ahead of the rest of the herd. You want to start with that pre-approval right now so that your chances of homeownership is successful in 2024. So get that started. Give us a call. Same phone number. You can always reach us at the same phone number. So stay tuned. Don't go anywhere. We're going to jump into this article about California home insurance crisis, and they're going to explain it to us. And I thought they just did a wonderful job doing that. Again, this is from Policy Genius if you want to look it up on the web. But stay tuned. We'll be right back. Are you a homeowner and you're equity rich, you're cash poor, and you're deep in debt? Well, follow along. You guys have to like my channel. I'm going to talk all about home equity loans this month and home equity lines of credit. Who are they good for? What are they good for? Why are they good? Let's talk. Follow my page. Equity rich, cash poor, and deep in debt. Follow along. I'm Debbie Marcoux. This is Mortgage Mom Radio. All right. So welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom. And I haven't seen a single chat come up yet, so I'm hoping that my chat is working. If you guys are watching the show, give me a thumbs up, give me a like, say hi, just tell me that you're here so that we can see that that chat is working. If not, Manny's going to do it old school, and he is going to jump on his phone on YouTube, and he's going to read those to me. So actually, he did that. He just made sure it was working, and he says hello. So Chief Manny says we're good. So thank you, Chief Manny. Willie jumps on, says hi. So hey, Willie, thank you so much for joining. I have actually never seen your name pop up on the show before, so I love that you are here. Scott jumps on. He says hi. So Scott, thank you so much for joining, and I am happy to see that you guys are here and you are with me. My chat was quiet. You guys weren't saying a word, so I was starting to get worried. You know, those technical difficulties in those computers. So let's get at it. I want to read this to you guys. I thought that they did a wonderful job. This was written by Pat Howard, and again, it was on Policy Genius is the name of the site, so you guys can look it up. And the name of the article is California Home Insurance Crisis Explained. So I thought this was really fabulous. We're going to talk about it. They get into California Fair Plan. So I'm going to explain to you guys what California Fair Plan is, because I think that is something that's important for people to understand what it is. And if they are buying a house and they find out that they are going to need to get a California Fair Plan policy, then it's something that they might want to stop and shop that insurance before they decide to continue on with their journey. Nunez jumps on and says, hello, here listening while working. Nunez Invest. Thank you so much again, you guys. I love that you're here, and thank you for letting me know. And Heather says, howdy. So here we go. Wildfires, and it's all going to come down to the wildfires and the basically our weather, right? So wildfires have burned 10 million acres of forest and destroyed 39,000 homes in California over the last 5 years, providing a glimpse at just how dire the state's climate crisis has become. Yet at a time when it's more vital than ever for homeowners to have adequate insurance coverage, many carriers have decided to no longer insure homes in certain parts of the state. while others have left the home insurance market altogether. So that's what I was talking about at the beginning, is that some insurance companies, and I believe State Farm is one of them, have just literally decided we are not writing any policies any further in the state of California. Well, when State Farm and Allstate and some of those bigger names decide to jump out of the insurance business within a state, I mean, that takes away a lot of resource for finding those insurance policies that you need as a buyer or a homeowner. So while shopping through an independent insurance agent or broker is often your best bet, if you're short on options, several companies have stopped writing new business in California until market conditions improve. So the latest on the California's home insurance crisis, it says, with insurance companies limiting their coverage, or leaving California by the day, it can be difficult for consumers to track which insurance options are and aren't available. To help California homeowners navigate this complex situation, we put together a roundup of the latest and most pressing insurance news from across the state. So couple of things that they're going to talk to you guys about. What one thing I thought was important is it says Safeco to drop policies in the Bay Area as of August of 2023. Farmers Insurance limits new home insurance policies as of July of 2023. So Farmers Insurance is going to stick to the policies that they've already written, but they aren't going to write any new policies. Allstate no longer selling new policies as of June of 2023, and State Farm no longer selling policies as of 5/26/2023. So this makes it, again, very difficult for you guys to find insurance when you're out there and you're searching for that as you're purchasing homes, or even if you own a home and you got that notice in the mail that your premium is going up or that they are canceling your premium entirely. I could see Willie jumps on and says, never bought a house before, have no idea where to start looking to buy in another state. So, there's a lot of people that have left California and they feel like that is their best option, as things have just gotten so expensive within the state of California for all different reasons. But this is just another one of them, right? The homeowners insurance is now very expensive. Now, one thing I do want to let you guys know before you all start crying and thinking that California is just absolutely horrendous and horrible is that there are a lot of people that actually during the pandemic decided to flee the state of California to other states, Texas actually being one of the biggest states that people were fleeing to and still are. Now, I can tell you this right now, being licensed in California and Texas, doing a lot of loans in the state of Texas, that Texas homeowners insurance is actually, or was actually, quite a bit more expensive than California's homeowners insurance was. They are now starting to be about the same. So it's not necessarily that the policies are so incomprehensible that you can't buy a home, or that you can't keep the home that you live in, or that you have to flee and go to another state. It's just that everybody needs to be very prepared for what that number is going to be. I used to, when putting together a monthly payment quote for a client, depending, of course, on the price of the home, the size of the home and everything, but let's say an average home of, a 700,000 sales price or a 600,000 sales price, I would have put together a quote of probably $65 or $70 a month for that homeowner's insurance. And I'm going to say that would have taken us back to probably 2015, 2016, even maybe 2017. Now, 2018, 2019, and 2020, that number went from $65 to about $80 per month is what I would have estimated an insurance policy to cost for, a monthly cost. Now, today in 2024, I would assume that number is going to be more like $120 per month. So I have personally doubled the number that I am estimating when giving a client a monthly mortgage payment for the same sales price from let's call it 16, 17, 18 to 2024. So, with inflation and everything else, prices do go up. Obviously, there's reasons behind why the prices are going up in insurance in California with all of the wildfires that have been had. The insurance companies are losing a lot of money from paying out on policies that they would have never anticipated or expected to have to do. Obviously, that's why people have insurance. That's why your lender requires that you get insurance in case your home was to burn down. And the insurance companies, need to understand that some people are going to have to use those policies, but they also have budgets and they have to be profitable. And what they anticipate in having to pay out, it went through the roof. It just absolutely got to a point where they are not profitable in any way. They are losing hand over fist money. So they had to bring those prices up. So just giving you guys some sort of understanding of how things have changed. But again, if you are a homeowner, if you have not received your renewal notice on your insurance policy yet for, 2024 or even maybe December of 23 and moving forward, be ready, be prepared. You very well may see quite a bit of an increase in your insurance policy cost. And so get ahead of it, get in front of it, start to shop with insurance brokers are a great place to start. We can give you a great number to a broker that we use. We've actually got quite a few of them. When we're trying to help a client to secure a policy, we don't just go to one place. We go to multiple places to see where we can get the best coverage and the best price for that coverage. So you're welcome to reach out to us if you would like to get some information about who we would suggest that you contact. But start researching prices now so that when you do get your renewal, or if you get that letter that says that your insurance has been dropped, you know exactly where to go to secure your new insurance policy. So I'm going to keep reading this, which I think is great because, again, this was really an awesome article. I think they really explained it very, very well. So this says, insurance, exactly what I just said to you guys. Insurance companies need to remain profitable enough to comply with state law and to pay out the claims of their existing customers. But this has proven to be increasingly difficult in recent years due to wildfire losses and other factors, said Angela Dokes, senior manager of property and casualty insurance strategy at Policy Genius. While many companies are restricting who can sell and purchase their insurance, Policy Genius is working diligently with our carrier partners to find a solution for our customers and ensure everyone gets the coverage they need. So that's their little plug. If you guys want to check out Policy Genius, I would suggest it because, again, this was a great article and they seem to absolutely be where they spot on and explaining this in the most perfect way. I can see Josie jumps on and says, good afternoon, Debbie and team. So Josie, thanks so much for joining. And again, if you guys have questions, please put them into the feed. This is interactive. You are more than welcome to ask any questions that you may have, just like Willie did. So this says, why it's so difficult to find home insurance in California. From surging climate disasters to government's regulations to ongoing problems with the supply chain, here's a rundown of the various issues plaguing California's home insurance market. So this is going to give you guys more than just wildfires, right? California insurance paid a record $15.4 billion in losses in 2017 and $13.6 billion in 2018 due to what were by far the two most destructive wildfire seasons in state history. To put these numbers into context, annual losses never once eclipsed $5 billion prior to 2017 and have yet to exceed that amount since 2018. After 2 straight years of insurers paying out $1.85 in losses for every $1 of premium, the California Department of Insurance approved 71 rate increase requests from 50 different companies in 2019. So if you think back to what I was saying to you guys when I was quoting clients a monthly payment and I was giving an estimate of what I thought their policy would be approximately in 2016, 17, 18, and even in 19, I was still quoting the same number because they have to go through and they have to get court approval to increase their policies. So we didn't actually see those increases start to hit until after that time frame. So it says, this means many homeowners have likely seen a steep premium increase in the last few years. So many of my clients have called me and said, why did my monthly payment go up? You had me in a fixed rate loan. You told me my payment wasn't going to change. And one of the things that people hear is what they want to hear. So I'm going to explain this for you guys again so that you are understanding, comprehending your mortgage monthly payment. So in your payment is your principal and interest. That is what you owe monthly to pay down the balance that you borrowed. Now, many borrowers, I'd say 95% of the loans that we write, also include in their monthly payment their property taxes and their homeowners insurance. So their policy is covered in their monthly payment. This helps them, instead of having to make a payment once a year for an insurance policy when it comes due, or having to make property tax payments when those are due. Instead, we take the money every single month and we put the money into an escrow account. And when those payments come due, those bills are paid out of that borrower's escrow account. So you are basically budgeting on a monthly basis these items that need to get paid. Now, property taxes and homeowners insurance can change as they want. If you're in a fixed rate loan, 15-year, 10-year, 30-year, whatever that number might be, 20-year, if you are in a fixed rate loan, that principal and interest payment will never move. It will be fixed for the term of the loan. It will never change. But your property taxes, should those be increased by the county, or your homeowner's insurance, should that be increased by your insurance carrier, that is going to change the monthly payment. So that is why you would see your monthly payment increase from your mortgage company. It is not because the mortgage company is just willy-nilly changing your payment or increasing your interest rate or changed your balance. It's because those things that are out of our control, that we cannot control what those numbers are, have changed slightly, which means your monthly payment will change as well. So keep that in mind. Let's see. Nunez Investments asks, how is the foreclosure market? So off topic of insurance, but I love it because, again, I want you guys to ask me questions as you see fit. You guide where my show goes and I answer the questions that you have. As far as the foreclosure market goes, right now, it's actually still very stable. We're not seeing a lot of foreclosures that have hit the market or coming to play. The majority of homeowners have a lot of equity in their properties. So for them to lose, somebody to lose their home to foreclosure wouldn't make any sense. Even if they're having a hard time making the payments, they get behind on the payments. Even if you're starting to see notice of defaults get filed with the counties, even at the point that you are in notice of default, you still have another 90 days to get your home listed for sale, on the market and sold, and that loan paid off. Why would you sit on a home and let it go to foreclosure when you've got money, you've got equity in the property? You are far, far better to sell it and take your cash and run than to let the bank take the home back from you. So right now, our foreclosure market is very slow, very steady. We're not seeing a lot of foreclosures come to market. That doesn't mean that it couldn't happen, but the forecast for foreclosures is still very slim. So we're not at this point right now forecasting that we're going to see some sort of huge event that is going to create a buttload of foreclosures to come to market. So I hope that answered your question, but keep them coming if you guys have more. And I'm going to get back to this insurance information because, again, I think it is so important for you guys to understand your monthly payment. Why does it change? Why did your insurance policy all of a sudden change? Why did you get that letter in the mail? What do you do if they drop your insurance? So really important stuff for you guys to be aware of. So we're going to get back to this article real quick. So it says, the current crisis reached its tipping point in 2019. That year, more than 230,000 policies weren't renewed by insurance companies, up 42% from 2018. And new policies written under the California FAIR Plan, a state-mandated program designed as a last resort option for homeowners struggling to find coverage on the private market, increased by 250%. 119%. So I do want to explain to you guys what California Fair Plan is. I actually pulled an article again. I love to give you guys great information. And I like to put it into words that you understand. And sometimes people are just smarter than me. So I liked the way that it was explained in Money Magazine, which is online. Their explanation from their article, which was called "Some California Homeowners Could See Premiums Double." This was from actually ABC 10 is who wrote this one. So I'm going to explain it. I think this is great. So it says the California Fair Plan, it's offered to homeowners who can't find any other insurance. Often their home is located in a wildfire-prone area known as the insurer of last resort. It is becoming tens of thousands of homeowners' only resort. It only covers a few perils, including wildfires, so homeowners need to buy an additional policy for other coverage. It also usually is more expensive than insurance bought on the private market, and the price for many is about to go up. Starting with those renewing in December, it could be as much as double. So let's explain that real quick too. So what do they mean by it's only going to cover a few perils and then you'd need to get a second policy? So the California Fair Plan is truly for a home that is located in a wildfire area where they believe that you're in a fire zone and the chances that your home could go up in smoke are very high. So the private insurance sector is saying, hey, we're not going to cover that anymore. We have just had so many losses and we have had so many policies that we've had to, fork over the money on and pay out on that we just can't afford it anymore. So California Fair Plan says, we're going to take care of this for you. We're going to give you insurance to cover that, but we're not going to cover anything else. So all the important things that are in a normal homeowner's insurance policy, like slips and falls, and, if a pipe were to break, if you were to have a flood inside your house, things of that nature, all of your personal belongings, your wedding rings, your pictures on the walls, your art, your artwork, all of those things that are very important to you that you want to make sure are covered and insured are not going to necessarily be covered in a California Fair Plan. So what's happening is you've not only got to get this California Fair Plan, but then you've also got to get the second policy to wrap around the Fair Plan to make sure that everything that you need coverage on is being covered. So it's definitely been very difficult the last couple of years, but we are noticing right now, and although it's been getting more difficult and policies have been getting more expensive, we are now starting to truly feel it. Like that article that I just read said, as of December of 23, if your policy has not come to renewal yet, expect to see a pretty large increase in your policy premium at the time of renewal here in 24. We've got clients that are out searching for homes that are entering into escrow. They're under contract and they're trying to find insurance. And it is definitely a more expensive policy than it would have been 6 months ago, a year ago, 2 years ago, 3 years ago. So one of the things that we want to make sure is that we are talking about insurance. That's a big, big thing. Where are you looking to buy? So if we are working on a pre-approval for you, where are you looking to buy? What area are you buying in? What county? What city? Give me a specific neighborhood. Let's look it up. Let's figure out, are you in a fire zone? What kind of insurance is going to be needed? Let's possibly get some idea of an insurance quote from an insurance agent prior to writing the offer on the home, because you want to know that you are good to go, that you have everything prepared and you're ready, and that is the home that is for you. Insurance is something that was always casual on the back burner. Well, does the payment make sense? We're estimating, the insurance, we're estimating the property taxes. We're getting pretty close to what we expect you to see, once you get into the transaction. And now it's becoming something that is very, very important that we are exploring and that we are taking care of with you up front. So I highly suggest that if you are thinking about buying a home and you want to get yourself pre-approved, number one, Mortgage Mom Radio, we are the office to call. We are the team to call. We love you. We want to work with you. We want to make sure that we get you through the process. We have all of the very best intentions of getting you into the right loan program and into the right home. And it is very, very important that we are also looking at things like the homeowner's insurance. And so we're going to take that extra step for you, and we're going to do some digging. We're going to do some searching. We're going to try to figure out, what you might be expecting as far as a monthly insurance premium would go, so that we know that we are putting you into the price range that you should be in. So what do you do to call Mortgage Mom Radio? Well, you call the same number that you text to get your weekly text to know that I'm live, but you call the office or you go to my website and you make an appointment. So it's mortgagemomradio.com. You can book an appointment right there. You can contact me right through the website, send me an email. You can call our office. It's 844-935-3634, and you can get one of us on the phone 7 days a week. Even on Saturday and Sunday, we do have people picking up the phone. If we miss the call because maybe we're on another line, the voicemail does say that we will call you back within 2 hours. Chances are you're going to get a call back within 20 minutes, 15 minutes after we hang up the call that we are on. But we are answering that phone 7 days a week. So please leave a message. Don't hang up. Don't not leave a voicemail. Let us know that you need something. Give us your name and number and let us call you back. Same phone number that you call is the same phone number that you can text. So if you want to send a text message that says, I've got questions and I need help, will you call me? We're going to call you back. So the text message is fine. And if you want to do this with me live every Wednesday, which I would love for you to do, same exact phone number again, just text the word mom. No quotes, no opt-in, no nothing, just mom, M-O-M. So what's that number? It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. So we are going to take a super quick break. When we come back, we're going to finish up the insurance. And if any of you have any more questions for me, even outside of insurance, go ahead and throw those into the feed right now, and we'll make sure you get those questions answered. So stay tuned. Who can benefit from a home equity loan? Okay, well, let's talk about this. Who are you? Who are the people that are going to benefit? All right, are you a homeowner? Number 1, check mark. Do you have equity in your property? Chances are you probably do. Many people have seen appreciation that has been uncomparable to previous years and times and decades. So many homeowners are sitting on a lot of equity at the moment. Now, do you have debt? Do you have debt that you need to pay off, but you're cash poor? You don't have the cash to get rid of those credit cards, those student loans, those car payments, anything that you might be in debt over, personal loans. If you have that debt and you need to try to figure out how to get it paid off, and you've got that equity in your home, you would be a perfect candidate to be looking into home equity loans. Home equity loans, when blended with your current first mortgage low interest rate that nobody wants to touch, are a great option. So what do? Call my office. Let's talk about it. Let's figure out what your best rate is, and if it makes sense for this to be something that could get you out of debt and feeling better and getting those monthly payments and that monthly cash flow in place. Give us a call. It's mortgagemomradio.com. Okay, so welcome back. So one thing I do want to note, because I'm trying to read things as I'm also talking, as I'm also reading, the news articles and such. So I missed that my mother-in-law, Karen, jumped on. So Karen, thank you so much for joining. I know that you are my second biggest fan, over and beyond my dad, who always gives everybody his life story in the comments. So if you guys ever want to know what is going on with the Mortgage Mom's dad, just tune into the shows live and watch the comments, because he's always telling us what's going on. One thing I do want to say, Dad, is stay safe. I can see that you're talking about flooding. He lives right next to a river in the middle of Illinois, which is great. I love it. I love visiting there. Trust me. His -16 recent degree weather changes are not fun and not something that I want to do. But because of those horrible weather blasts that they've been getting back there in the Midwest, right now they are in flood watch. So for all of you that might be listening possibly to the show who are in the Midwest and in the East, where you guys are getting that Arctic cold right now and you guys are suffering from things like flood, I do just want to say, I'm so sorry, and we wish you the very best, and our hearts go out to you from Mortgage Mom. But anyway, Dad, thank you so much for being my number one fan, and my mother-in-law, Karen, for being my number two fan. I love it. Okay, so here we go. So back to insurance really quick. So I want to give you guys some tips and advice. We didn't go through this at the beginning, so I want to finish with this. These are the 5 biggest things that you guys should be doing if you get a letter in the mail that says that your premium's going up, or you get a letter in the mail that says that they are canceling your premium, or if you are a buyer who is looking to buy a home and having a difficult time getting themselves an insurance policy for the property that they are purchasing. So number 1, contact your insurer if your policy is canceled or non-renewed. If you get a notice from your insurer informing you that your policy won't be renewed, contact your insurance agent and ask if there are any specific property upgrades or steps you can take to mitigate your home's risk and keep your policy. So this is one of the things that a lot of people don't know, that there are some upgrades and improvements that you can do to your home, even if you are in a fire area or a fire zone, that the insurance policy may be willing to continue to carry your policy if you do those upgrades and improvements. Some of those things could be like a fire retardant roof, or putting some sort of a structure around the property that would keep you safe from the winds and the fire blowing into the property. You would have to get very specific with your insurance agent about what are the improvements, or are there any that you could do to try to continue to keep the policy that you have in place. Because again, as we said, looking for a new insurance policy, there's a good chance that you can find another insurance policy with a different insurance carrier. But if you have to go to the California Fair Plan, that insurance policy is going to get significantly more expensive. So we do want to try to save you from that if possible. All right. So number 2. Take steps to fireproof your home. Taking steps to reduce your home's wildfire risk not only makes your property more attractive to insurers, but it also can earn you discounts on premiums. Certain programs like the Wildfire Prepared Home Initiative offer through the Insurance Institute for Business and Home Safety. That was like a lot for the mouth. And the Department of Insurance offering fireproofing designations if you install fire-resistant roofing, as I mentioned, or create a defensible space around your home, as I mentioned. You also may be eligible for additional discounts if your home is in a fire-wise community. And then currently offering wildfire mitigations discounts in California. So you want to find out if you're in a fire-wise community. You can literally Google that and look it up, and it will tell you if you are or you are not. It gives you a list of those communities. Those communities are going over kind of beyond by making sure that they've got more than enough fire hydrants down every street, and things that they're doing to protect the neighborhood and the home. If you guys live up against a hill, they might have additional sprinkler systems that have been installed to make sure that they're keeping that foliage nice and green and not dry. So you can definitely look it up to see if you might possibly fall into one of those neighborhoods. All right, number 3, contacting a local agent. So this is where I had said earlier in the show, if you need to get the name and phone number of a good insurance broker, we are happy to help you. We have got multiple of them that we have worked with in the past, and we always dig around ourselves for clients who are in process to see if we can't get them better coverage and at a lower price. So definitely feel free to reach out to us if you'd like us to give you a referral. But contact a local agent. Many insurance companies in California have placed restrictions on what kind of agents can sell their insurance policies. Consider contacting a local insurance agent who's familiar with California's unique insurance landscape. If you're having trouble finding an agent that's licensed to sell policies other than the California Fair Plan, the Department of Insurance has a handy home insurance finder tool that can provide you with a list of agents in your area and the insurance companies they represent. So that was called Home Insurance Finder Tool. So again, you guys can Google that. You can go right into Google and you can type in California Home Insurance Finder Tool, and that should pop up for you to be able to click on, put in where you live, the area, your state, your city, and it should give you the list of insurance agents in your area and the companies that they work for. All right, number 4, contact the California Fair Plan. So the California Fair Plan is the state's insurance program of last resort that provides insurance coverage to homeowners who are denied coverage on the voluntary market. If you're unable to find home insurance coverage because of your home's wildfire risk or other factors, the Fair Plan is a suitable short-term option. However, keep in mind that fair plans are often significantly pricier and coverage is more limited than a standard policy, as it generally doesn't offer coverage for liability, water damage, or theft. To supplement this gap in coverage, consider a difference in conditions, a DIC policy. Again, that's going to be that wraparound policy that we talked about earlier in the show. So you want to get an additional policy to cover those belongings that won't be covered, or the additional things that you need coverage for that wouldn't be covered in that California Fair Plan. All right, last one, number five. Consider an E&S carrier. So we have not talked about this yet. An excess and surplus carrier is an insurance provider that specialized in insuring high-risk properties that are considered too risky for traditional insurers. Keep in mind, these policies are not backed by the California Insurance Guarantee Association, which means if your house is destroyed and the insurer doesn't have the funds to pay out your claim, you could be left footing the bill yourself. You can find a list of E&S brokers in California on the Surplus Line Association of California website. So I would not suggest the E&S route. Obviously, if you already own the home, you have no intentions of selling your home, your insurance policy was dropped, you can't find insurance through a private insurance company, you have to go to the Fair Plan to get your insurance. The Fair Plan is unreasonably expensive. You're basically going to lose your house if you try to foot the bill for the California Fair Plan. Then E&S would be one more option that you could look into to see if it's possibly going to be within the budget. Something is better than nothing. So with that, I don't see any more questions in my feed. I don't see anybody else that's asking anything. So I am going to end the show here. I hope you guys join me again next Wednesday. We always start right about 1 o'clock. Today we were ready at 1, and go figure, technology, the camera was frozen. So we had to wait till 1:15 to get started, but I always send out that text message so you don't miss me. You get the whole show. Make sure you subscribe. Get yourself that text once a week. Text the word MOM to 844-935-3634. That's 844 We Lend For You. WELEND and the number 4. We'd love to work with you. We'd love to do your loan for you, whether you are buying, selling, refinancing, getting into a reverse mortgage, you need a home equity line of credit. Mortgage Mom Radio is here. That same phone number is the number that you call to get our office. And once again, you can go to my website. Go to mortgagemomradio.com. You can book an appointment. You can contact me through email. You can do whatever you need there on the website as well. So my mother-in-law says, thank you for such an informative show and sharing the resourceful article. You are very, very welcome. It is my pleasure. I love bringing you guys information every week, and especially important information. And since I would say 75% of my listeners are from the state of California, I wanted to make sure that we did address this issue, because we have got quite a few loans going, brand new purchases and refinances where insurance is starting to become a slight problem. And we are digging in, rolling up our sleeves, and getting the very best quotes that we possibly can for those clients. And we are here to do that for you as well. So once again, call us, go to my website. We'd love to help you. We'd love to work with you. And we will see you again next Wednesday right here, right about 1 p.m. Pacific time at Mortgage Mom Radio. Talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call Mom.